Hello, ladies and gentlemen. Welcome to the show. Listen, I'm glad to have you guys here. Today is Thursday, the 2nd of January, 2019. Let's get started. Let's start the charts right here. You know, I was over at Zero Hedge, and I seen this article, and I love this analogy that the world's um, financial system is like a Rube Goldberg machine. It says it's a ridiculously complicated contraption built to perform what should be normally a simple task. And, you know, we're going to take a look at a few Rube Goldberg machines, you know, here, up here on the pictures of them. This one looks interesting right here. What they basically are is they are like a contraption that runs on gravity. And there's many different versions of it. You can make one yourself at home, you know, just by having a few simple things that you lay out, like a little ball will run down a channel, you know, and then it'll trip a switch, and then little something else will happen, and it's like falling dominoes. Generally, they do them with dominoes, you know, these Rube Goldberg machines. Here's one right here where you can see it probably runs on little steel balls, and the pipes flip, and then the you know, it's a complicated machine that does a simple task. Well, that is what the world's financial system is like. Really, this is a wonderful analogy of it. There's so many complicated moving parts within it, different markets, and they're all interreliant on one another. You know what's happening? The Fed's sitting back there watching their giant Rube Goldberg machine. And when something goes wrong, they rush into the rescue, like the repo market started to break down. Well, as this financial instability starts to spread through the system, we're going to see more and more failures, and we're going to see the Fed rushing in to try to stop it. But possibly what the biggest failure of all that's coming up is going to be is, let's move over here to this article from Zero Hedge, right here. The Fed is up against a $33 trillion stock market that's overvalued, and it says he says one day the stock market falcon will no longer hear the Fed falconeer, and the pavilion magic thinking will break down as the market goes bidless. Well, that's a big worry out there, that the market's going to go bidless, the market's going to drop real fast, you know. And I think it's probably going to happen, probably this year. But they're thinking that that's going to cause deflation. And it would, if the Fed didn't do anything about it. But, you know, let's approach this in a logical fashion. What do they do when the market falls an extremely large amount, quite suddenly? What have they set in place if the market falls like that quite suddenly? Well, they've put stops in, so they close the market. They stop it. It stops. That gives the Fed a chance to come in and respond. And let's look at how they responded to the repo market when the repo market got in trouble. $75 billion a night? No problem. $100 billion a night? No problem. You think they're not going to do that if the stock market rolls over? So yeah, we could get a huge fall off in the stock market. A monster. They're going to stop it. They're going to stop the stock market. Then they're going to come rushing in with liquidity. And that's their answer for everything that stops in this Rube Goldberg machine. Then what they do is when they reopen the market back up, it's going to go back up. But for every action in this universe, there's an equal and opposite reaction. So when the Fed does this to support these markets, they come rushing in with liquidity and everything to support the markets. What's going to happen? It's going to be at the expense of the dollar. That's what's going to happen. And no, they cannot just let it all collapse, because if they let the entire system collapse, the whole house of cards come down. What would happen is they know that their jobs would be on the line. Well, more than just their jobs, but their jobs would be the first thing on the line. And they got cushy jobs. They don't want to lose their jobs. Of course, when they see they're going to react to what happens in the market. So I'm expecting this year, I'm expecting this huge fall off in the market. It's going to be really scary, guys. I think they're going to have to turn the market off. Maybe for days, maybe even for weeks. And that's why I've been telling you guys, hoard some $5 bills on hand, because the financial system just might basically lock up for a few weeks. It is entirely possible. Let's get in there and let's take a look at what gold's doing today. Investors, I'm not the only one that's feeling these tremors within the market and stuff that's going on, and it's creating fear. And this is when the market's still up. There's a lot of people out there, and they're buying gold and stuff. They're starting to. Investors are starting to buy in, and gold is finding bid. Look right here, $15.27 today. It's up $10.40 today. Silver's been following, but not quite as good, Silver's still at $17.99. This means the gold to silver ratio is becoming even more skewed because silver's not keeping up. Gold is leaping out ahead. And the reason why gold's leaping out ahead is that's the first thought investors have when they start to feel insecure. Gold. Buy gold. Silver's not catching as much of a bid. So silver's still in the $17 range, where gold's heading for $1,600. Look at gold, $15.27. It's making it up there, It's climbing that mountain, gold is. But, never forget that gold to silver ratio is extremely out of whack right now. And it's going to go back. And when it goes back, that means that silver is going to outperform gold ultimately in the end. Don't forget that. Let's take a look now at cryptocurrencies. Hasn't been going anywhere for days. It's stuck in a rut. And it's 190 billion today, 68.2% Bitcoin dominance. Let me refresh the page and see which direction. It's almost stopped. It's almost completely come to a stop at 190 billion. And so we see Bitcoin at $7,151, 71.51, and we see Ethereum 129, Bitcoin Cash 202, XRP is 19 cents, Litecoin is 41.43. Okay, so those are your top coins. Let's take a look now at the Dow. Let me refresh the page. It's up 130 points on the day so far. This market is going to take a sudden tumble, I think. All it would take is a little something to trip it, at this point, because it's just so high. 28,668. It's up 130 today so far. Let's take a look at oil. $61.04. Oil's declined just a little bit, but if we go out over the last year and take a look, we can see that oil is up over the period of the year. Going back earlier in the year. Let me see if we can get out a little bit further here. We can see the prices down below $60, and we can see it's climbed up. Had a peak of $61.72. Now it's $61.04. Let's take a look at U.S. Treasuries today. See what they're doing. Now, they're going to support all of these markets. They're going to support the Treasury market today. They're supporting it today. We can see 3.3 basis points on the U.S. 30-year. You can see the yields falling. When we see these yields falling, this means that treasuries are rising in price, when we see the yields falling, because it's an inverse relationship. So down is up with treasuries. So we're seeing all the yields down. That means treasuries are up. We're looking at 2.34 on the U.S. 10-year, the 30-year, and the 10 years at 1.88 today. We can see the yields on the long end of the yield curve today. Yields are dropping on treasuries. Now let's take a look at the U.S. dollar index. 96.76 on the U.S. dollar index. And the dollar is up just a little bit today. Gold's moving up and the dollar's moving up. That's because we're in bizarro land now, guys. They're gonna support these markets. They got no other choice. The alternative is to let everything collapse and the system will grind to a stop because everything runs on money, you know? So they have to keep it running. And to keep it running, you know, is just going to require more and more money. And it's like a Rube Goldberg machine. And when they spot some part of the machine break down, they're going to rush in, they're going to fix that spot. They might have to close things down in order to do it. They might have to stop the whole machine in order to go in and fix that spot. We saw what they did with the repo market. They went in and they fixed it. That's what they're going to keep doing. And it's going to keep breaking down more and more. There's going to be more and more places they're going to have to run in and support it with liquidity. And each time they support it with liquidity, it's going to become more and more obvious to everyone out there that this ain't going to stop until they completely make the dollar worthless. And this is hyperinflation, what ultimately in the end, because of the amount of liquidity they're going to have to keep pumping in to keep this machine running, is going to push us into hyperinflation. You know, and I understand exactly where they're coming from, like in this article where they're talking about how can they continue to do this, you know, can they just keep pouring money in? Can they, you know, it's like you can't get your head around it. Can the Fed keep expanding their monetary policies, you know, to cover everything? And you keep thinking to yourself, well, maybe it'll just all collapse, you know, because they won't be able to. And, you know, there is that possibility. I'm not going to deny that the Fed could just stand back and say, well, we're just going to let it go. Let it all collapse. No, they're going to be forced to. It's just like Mario Draghi. He said, whatever it takes. And that's basically the general attitude. But it's going to be at the expense of the fiat currencies. And that's when the real crisis is going to come, when the fiat currencies start to actually hyperinflate. And there's going to be nothing that they can do to stop that. See, they have a tool to stop this deflation, but they don't have a tool to fight against hyperinflation. And they're not going to be able to stop the hyperinflation. Once the ball gets rolling on this hyperinflation, there's no stopping it. It keeps going until all of the fiat currencies are totally worthless. What's that going to do to gold and silver? What's that going to do to cryptocurrencies, ultimately, in the end? Anyway, listen, thank you guys for listening to this show. I know I rambled on a little bit about it, but I don't see it moving in any other direction than them keeping up their support of the system, no matter how far they have to go with their money printing, because that's their only tool. It's a very effective tool. It's proved very effective to keep us going ever since 2008 until now. Is there any reason to believe that they're going to stop using that tool? They're just going to keep using it in bigger and bigger forms until the dollar's toast. Basically, that's the way I see it. See you guys later, and give me a thumbs up. Bye-bye, guys.